Breaking nuclear news. Let's dive right into the price action on the week. Spot uranium miners ETF was up 0.7%, whereas the broader market, S&P 500, was down. We're splitting hairs here, but that is outperformance. And so even though uranium stocks diverge positively from the broader market, we are still correlated. And what we're waiting for is for this centrally planned economy that is completely and utterly manipulated to turn in favor of risk assets. It can't go down forever, right? And so that's the question. Why did the market stop its death spiral for the first time in a while? And so let's figure out exactly why. The reason is this chart. Fed balance sheet path in USD. So you can see the gold line here is the projection. So blue, dark blue is the Fed's balance sheet growth. Yellow is the projection, right? So the market has been pricing in the Fed to lower its balance sheet. And you can look how comical that forecast is because all the other lines, the green line was completely violated and the blue line diverged. Every single other line was a joke. All the forecasts, everyone thought the Fed was going to roll off its balance sheet and it never did. The blue line just completely diverged. So what do you guys think is going to happen this time around? That is the most important question when you're figuring out what the direction of risk assets are. If the Fed's balance sheet is going to grow, then risk assets are going to pump. That's just how it has worked historically. Obviously, the problem now is that inflation is forcing the Fed to crash financial markets and even roll off its balance sheet. So the most important question here is what's going to happen to inflation? Because if inflation goes up, well, that forecast is going to come true. So the real question is what is going to happen to inflation? And so obviously no one has a crystal ball, but you can see what the market is pricing in. Mr. Market is crazy. It doesn't always understand things. I'm sure a lot of you guys think we're going to get out of control inflation, but this is what Mr. Market is thinking, right? This is what's driving the market price. This could be completely wrong, but these are U.S. inflation expectations polled by University of Michigan. This number saved the week. So you can see we got a meaningful reduction in inflation expectations. They were rising all through 2021, all through 2022. The Fed was forced to raise interest rates, halt the growth of its balance sheet. That's all they've done. They've halted the growth of their balance sheet. And so look at that declining move. That is a significant move in inflation expectations, whether that's right or wrong. Normally, what the market has expected has been completely wrong. But what we know here is that the market is now expecting inflation to reduce. And so that has emboldened the Fed. So this saved the week. The Fed has already stopped shrinking of the balance sheet. Total assets grew by $4 billion the past week to $8.9 trillion. Fed balance sheet now equal to 36.5% of US GDP versus the European Central Bank's 82% and Bank of Japan's 135%. So markets are sniffing out that if inflation expectations are shrinking, the Federal Reserve may be able to finally put the needle back into the arm of the market that is absolutely addicted to cheap money because it's all falling apart. The reason I'm talking about that on this uranium show is because as of right now, uranium stocks have not diverged from the broader market quite yet. But what is extremely exciting is that the highest quality assets in this market will massively outperform to the upside once this centrally planned economy starts to play its course. Now, you can bet on the entire system blowing up. I don't think we're quite there yet. But if the market's inflation's expectations are wrong, if actually they're expecting it to dip, but it skyrockets, well, all bets are off. There's going to be a massive meltdown in all risk assets, unfortunately, including uranium stocks. Regardless, it seems that since the market is thinking inflation is now peaking, risk assets may be able to finally move up, at least in the short term. And so I totally understand if you're feeling bad about being a uranium investor because the market is dipping. But here is the stark reality. This chart is showing performance breadth. You can see in the green line, most recently, this is the percent of asset classes with positive annual return. That tiny little green bar is representative of two asset classes, gold and some commodities like oil, right? Because there's an energy crisis. But everything else, percent of asset classes with negative annual return, look at in 2022, historically, it has never been this bad. So the truth is there is absolutely nowhere to hide in this market, even if you're in the highest quality assets. You can be long gold, which is a safe haven. You can be long oil. And so the bottom line is there was nowhere to hide in this market except for gold and some commodities. We are investing in the highest quality assets for the long term. That is the goal of the early stage investor. What do all the billionaires in the world do? They sit on their equity and they ride it for years. Every single billionaire that you know has not day traded their equity. They've owned the highest quality assets and they've held them for the long term. That's what this is all about. So let's dive into uranium. Is it a high quality asset? Let's dive into this great article, which summarizes everything we've been talking about and points to where this entire space is headed, regardless of the short-term fluctuations due to macroeconomic manipulations and inflation. Addison betting big on uranium price demand resurgence. Uranium is an unusual commodity to analyze because it is mainly bought under long-term contracts by those utilities who operate nuclear power plants. Owing to this, the demand that sets the price is not simply the volume that is consumed in a given year. So it's the volume that utilities put under contract during the year and the supply available to fill those contracts in future years. Owing to this, there has been a somewhat depressed demand environment. That demand is defined as contracted volume as opposed to consumption. US-based investment asset manager Azarias Capital said in a January report that the past several years of minimal uranium contracting had left nuclear power utilities around the world with significant uncovered fuel requirements from 2023 and onwards. This is absolutely epically huge. Significant uncovered fuel requirements from 2023 onwards. Azarias said it expected utilities to spend this year aggressively seeking to secure their uncovered fuel requirements for next year and beyond. However, the question remains whether producers will be able to deliver on those fuel requirements. We believe strongly they will not unless incentivized with much higher prices. That is the thesis for uranium. There's a supply crunch. Producers can't deliver on the demand. And so we get this pump in the spot price. According to the World Nuclear Association, total uranium supply dwindled by more than 10,000 tons between 2012 and 2021, with global tri-uranium oxide supply having decreased in the same period. With prices hovering around the $50 per pound mark, Parnham believes a new uranium mine right now would struggle to break even at $50 a pound. So if people want these producers to pump out uranium, it's going to be at a higher price, and that's going to be great for all the uranium miners' profitability. However, with prices expected to rise significantly in the next few years, a new production capacity sure to become sorely needed. Well-developed and de-risked uranium assets would become increasingly lucrative. It's a little bit of a risk for entrepreneurs like us, but when you assess the overall uranium market and the overall energy market, it's clear that the price of uranium has to increase. So far, things seem to be going Madison's way, with investment institution Bank of America saying in April that it had raised its uranium price estimates for 2022 through 2027 by 20% on average. So this is summarizing all the news we've been covering over the last few weeks. Moreover, in November last year, US President Joe Biden's administration passed an Infrastructure Investment and Jobs Act that saw the country's nuclear energy sector being allocated $25 billion to $3.2 billion of that sum to be invested up to 2027 on an advanced reactor demonstration program, and $6 billion to be poured into a civil nuclear credit program to preserve the country's existing nuclear fleet and prevent premature shutdowns of nuclear power plants. Here's the wall of money coming into this space. It's a long-term investment. We're hearing 2027, 2030, nuclear is going to be a bigger deal then. At the same time, last year, reports emerged that China was planning to build 150 new reactors at a cost of about $440 billion, which is more reactors than the rest of the world has built over the past 35 years combined. This is exponential demand growth. Additionally, Reuters in January reported that the European Union had drawn up plans to label nuclear energy projects as green investments if the projects have a plan, funds, and a site to safely dispose of radioactive waste, to be deemed a green investment by the EU. We talked about that last week. This is opening the floodgates of capital from BlackRock, which we know pretty much controls US financial markets and probably global financial markets at this point, because they give out the ESG score. Companies need to be green. Nuclear is now green, which means capital from investment managers is flooding in. It's absolutely huge. Parnham said the EU's decision in this regard would further open the door for long-term investments in nuclear power. All of these developments point to a resurgence of uranium as a profitable commodity as it was between 2006 and 2012. I think we're still very early in the next uranium cycle where we can make obscene amounts of money if all things go right. From an investor's perspective, I think one should be looking at the sector very seriously as being investable today. Again, like Warren Buffett says, Mr. Market is crazy. Someday you get stuff at good prices, someday you get it at bad prices. Obviously, you want to buy stuff on sale. Now, let's look at what another CEO is saying, the CEO of Duke Energy, an absolutely massive energy player. No power technology can replace or do the job of nuclear today, says Duke Energy CEO. Duke Energy, which operates out of Charlotte, North Carolina, is an American electric power and natural gas holding company, which distributes energy to 7.2 million Americans. And in the Carolinas, 50% of that electricity comes from nuclear energy plants. I do not have a technology that can replace that today. I think people understand that over the next several decades, we must transition away from fossil fuels, adding nuclear needs to be a part of the equation. Bill Gates is another outspoken advocate for nuclear technology and the transition to clean energy. According to Gates, if we're serious about solving climate change, and quite frankly, we have to be, the first thing we should do is keep safe reactors operating. Even then, just maintaining their status quo is not enough. We need more nuclear power to zero out emissions in America to prevent a climate disaster. Whether you agree with the whole global warming scare or not, this is the reality. This is where the big money is going. This is where the big investment is going. Smart money, you could argue. Duke Energy is investing in smaller modular reactors to see if they can reach the point of commercialization by the 2030s. So a revolutionary early stage asset class, small modular reactor. So now let's move into what's moving these markets in the short term. Globally, European heat wave risks curbing French nuclear power production. Output from Gulf Tech plant may be reduced. That comes as Europe needs France's electricity more than ever. This is the problem. France underinvested in nuclear energy. The infrastructure is shaky. They need to obviously put more money into it, and they've talked about putting more money into it. But the problem here is that warm temperatures mean that production restrictions are likely at the Gulfec nuclear plant in the south of the country from Thursday. Electricity to France said in a filing with grid operator. Temperatures in France and the Iberia region will be well above average and even hotter next week. The reduction is another blow to EDF, whose 56 reactors vital to Europe's power supplies are already operating at about half their capacity because of maintenance and checks. So here's a chart showing French power prices obviously going vertical. That's not the only European country in a massive energy crisis. Germany's gas crisis generates nuclear dilemma for ruling Greens. They are absolutely dependent on Russia's fuel source. You don't want to be dependent on your enemy for your own survival. This is July 15th. Everyone totally doubts that Germany will ever move to nuclear, but here we have a brand new article speaking to this. German conservative politicians have revived debate on extending the life of the country's 3 remaining nuclear power plants, and polls show a rise in public support for the energy source in the face of a possible cutoff of Russian gas. But an extension is highly sensitive for Germany's ruling Greens party, which grew out of the 1970s anti-nuclear movement. Germany's ruling Green party has plunged this country into an energy crisis. So we'll see if people still want to give them power over this type of decision. Sometimes stuff just doesn't make any sense. But in Japan, they figured it out. They are having their own issues. And so Japan PM Kishida asked industry minister to have up to 9 nuclear power plants operational this winter. They understand the energy problem. They are accelerating the move to revitalize their nuclear industry. Obviously, great for the demand of this commodity. And so that will cover the nuclear news on the week. If I missed anything, please be sure to let me know in the comments. Let everyone else know in the comments, so that nothing is missed. It's an extremely exciting time to be an early stage investor in this revolutionary, new, burgeoning long-term bull thesis. I'm going to release a video tomorrow, which is going to include all those macroeconomic charts. I showed like 3 in the beginning of this video talking about the Fed's balance sheet, but I live in the financial media space. I come across so many charts. So what I want to do is consolidate a week's worth of charts showing the ISM, the PPI, the CPI, all the macroeconomic data and the trends, and just consolidate them in a video for you guys so you understand exactly where we're going, because markets are all correlated and it's a very complicated world. I cannot wait to get that out tomorrow. Talk soon.